Ever wonder how those huge companies, the big guys, they always seem to have insurance for absolutely everything.
Mm-hmm.
It's not just luck, right?
Right.
They're often using something, it's called captive insurance.
Okay.
And get this, smaller businesses, like if you're running a fast-growing delivery service, maybe something in the Amazon delivery space, you can use this too.
Interesting.
And that's what we're diving into today, how captive insurance works and if it might make sense for your business. We're looking at a webinar transcript all about a program called Deliverre Insurance Limited.
Okay.
And they're specifically targeting delivery businesses.
Thanks, Sam.
They see there's some really good benefits to this. One thing that stood out to me, this idea of like risk sharing. So basically, let's say you've got a bunch of businesses in a group and one has a really rough time, a huge loss.
Yeah.
The others all chip in to help. It's almost like, you're weaving a safety net, but the threads are made out of everyone sharing the risk.
I see.
But let's back up for a second before we get into the nitty-gritty of it all. What exactly is captive insurance?
Okay. So imagine you are forming your own insurance company,
Okay.
but it's owned and controlled by a group of businesses, and they all have similar risks. Right?
Okay.
So instead of forking over premiums to a big insurance corporation, crossing your fingers, hoping for the best, you're basically creating a pool of resources.
Okay. So you're not just stuck with whatever rate the entire industry gets. You have some say in it, and the premiums are based on how your group's doing, right? Based on your history.
You got it. And that's often where the cost savings come in. Like if your group has really strong safety practices, and maybe you haven't had as many claims, your captive, it can often get you lower premiums, way lower than traditional insurance.
That makes sense.
Yeah.
And Deliverre Insurance Limited, they're laying out all these benefits.
Yeah.
Lower premiums, that's just the start, right?
Yeah, absolutely. They're really pushing control. So control over how claims are handled,
Okay.
access to resources, especially for loss control, and even some insulation from how crazy the insurance market is right now.
Which, let's be real, the insurance market is all over the place these days.
Totally.
Costs are up everywhere. But by coming together like this, these delivery businesses, I mean, they could get some stability back.
Exactly. And I think they're onto something here, addressing the unique risks of delivery businesses.
Like what?
Well, they talk a lot about driver training and making sure vehicles are safe, which makes sense, right?
Yeah.
Because, I mean, more driving, it equals a higher chance of accidents. It's just the nature of the business.
It's a numbers game.
Exactly.
And that's what's interesting to me about Deliverre Insurance Limited. They're not just throwing a generic insurance package at you, They're really tailoring their approach to the delivery market.
Yeah.
Okay, so we understand why someone might want to do this, but how does it actually work?
Well, it really comes down to sharing risk, But there's a lot going on under the hood, like financially.
I bet.
But the webinar, it does a good job of breaking it all down.
Which is important. Like, we need transparency, right?
Yeah. Oh, 100%. So how they calculate premiums, it's not just some, random number someone made up. It's based on what they call a loss pick, basically. They're trying to project how much they think the group is going to lose in a year.
And who figures that out?
Actuaries, the math wizards of the insurance world.
Okay, so they're using data and real expertise to come up with these numbers.
Exactly. And that loss pick, it takes into account all sorts of things. The number of businesses, the type of coverage they need, their history of claims. It's all about getting a clear picture of the risk.
That makes sense. So they've got this loss pick figure. Then what? How do they manage the money part?
So that's where the loss funds come in, how they structure it. Think of it like there are two buckets, two main ones. Primary fund, excess fund.
Okay, 2 buckets.
Each member puts money in both, right? Primary fund, that's for the smaller stuff. Fender benders, maybe a minor injury at work, those predictable, smaller claims.
Well, like the everyday stuff that happens.
Exactly. Now, the excess fund, that's for when things get serious.
Okay.
Major accident, $1 million liability claim, those things you never want to think about, but, got to be ready. And this is where that whole risk-sharing thing comes in.
Right. That's what I was interested in.
It's a pretty big deal. So say one of the companies in Deliverre Insurance Limited, let's say they have a terrible accident, right? A truck, multi-car pileup, people hurt, damages everywhere.
Oh, no.
The claim comes in $1 million.
Wow, that's rough. No one wants to deal with that.
No, definitely not. But that's where the captive insurance really shines, right? Instead of that one company being on the hook for the whole thing, they all pitch in using money from their excess loss funds.
So it's like a safety net, like we were talking about before.
Exactly. But this brings up another question. What happens if there are more of those smaller claims than they planned for? Like, what if the primary fund isn't enough?
Right, because even if you're super careful, sometimes stuff happens.
Exactly. And this is where it gets really interesting. So the webinar, it talks about something called an assessment. This kicks in if there are more losses than expected.
An assessment. That sounds a little scary.
Yeah, well, basically, it means members might need to contribute more money if the captive is running low on funds.
So it's like a safety valve, so they can make sure they can actually pay everyone's claims.
Exactly. It's not ideal. No one loves that, but it keeps the lights on, you know?
Right, I'm sure they don't just bring it on you, right?
No, I know they've thought about that. So there's a cap on how much any member might have to pay in a year, and it's spread out. So it's not like one huge bill all at once.
Okay, that makes me feel a little better about it.
But it's still something to keep in mind. You're potentially paying less for premiums and you have more control, but there's also the risk of this assessment thing. It's a trade-off.
Okay, that's fair. Switching gears for a second, the webinar mentioned something about financial safeguards, how they make sure everything is, on the up and up.
Oh, yeah, that's huge. Because with insurance, it all comes down to trust.
Totally. They talk about this company, Arch Insurance Company. They call them a fronting carrier. I'll be honest, I wasn't really sure what that meant.
Sure. So basically, a fronting carrier, it's a licensed insurance company, and they've got really good financial ratings. They're like the backup, the guarantor.
So they're like the big brother with a good credit score that you put on your lease application.
Huh. Yeah, that's one way to put it. In
Yeah.
this case, this Arch company, they're saying, hey, we believe in Deliverre Insurance Limited. We think they're good for it. They're essentially vouching for them.
Okay, I can see why they do that. Makes them look more trustworthy.
Absolutely. But on top of that, members have to put up collateral.
Like a security deposit.
Yeah, exactly. Everyone contributes. It's like a financial guarantee for the whole captive. So even if one company has a rough time, can't pay their bills, the captive still has the money to cover claims for everyone else.
So they've got all these different things in place. The loss funds, the assessments, this fronting carrier, the collateral.
It's like a multi-layered cake of financial security.
Right.
They've really tried to think of everything, which is important with captive insurance.
Yeah, I'd say so.
Yeah.
But even with all of that, things can still go wrong. I mean, that's just how life is, right?
For sure. Same with traditional insurance, to be honest. That's why you have to do your homework, really understand the program, read the fine print.
See if it all makes sense for your business.
Exactly.
And that's what we're going to talk about next. Okay, so we've covered what captive insurance is, how it works. But the big question is, should you consider it? And specifically, should you consider Deliverre Insurance Limited? This is where it gets real, Because it's not just about captive insurance in general. It's about if this program, Deliverre Insurance Limited, if it works for you.
It's like, yeah, finding the right shoes, right? What fits one person might not fit another. Same with insurance.